This is the ERP Advisor.
Today's episode, what to do when you outgrow your accounting software. Hello, everyone. Thank you so much for joining us for today's webinar, What to Do When You Outgrow Your Accounting Software. Our presentation today will cover the following learning objectives, and Will go to that next slide with the learning objectives. All right, we're going to understand why companies outgrow their accounting software, how to decide if you need an upgrade, explore the 4 tiers of accounting applications, an overview of additional financial reporting tools, and understand key points for approaching a software selection. Today's presentation is valid for 1 CPE credit. In order to receive that CPE credit, each attendee is required to attend the full 15-minute presentation, as well as engage and answer all of the poll questions asked throughout the presentation. If you are needing CPE credit for today's presentation, please leave your name in the chat of this Zoom, or you can send an email to Elizabeth Jones at elizabeth.jones@erpadvisorsgroup.com. That email is also in the chat right now in case you need it. And for record, you send that email and then you will be issued a certificate for CPE. At the end of today's presentation, there will be a short question and answer period. If you have any questions for our presenter, please add them to the chat. You can add them throughout the presentation and we will document them and ask them at the very end. Sean Windle is our presenter for today. Sean is the founder and managing principal of ERP Advisors Group based in Denver, Colorado. Sean has worked in the enterprise software industry for almost 30 years. He started his career at Accenture and Arthur Andersen Business Consulting and moved into the software industry with Oracle as a technology product manager. There are only a few people in the world with the practical software experience that Sean has gained, with helping hundreds of clients across many industries, with selecting and implementing a wide variety of enterprise solutions. His podcast, The ERP Advisor, has over 250 episodes with tens of thousands of downloads and is featured on prominent podcast platforms such as Apple and Spotify. Sean, if you are ready, I am going to go ahead and pass this presentation over to you.
Great. Thanks, Rebecca, as always. So good to see everybody. Let's see. So we are going to spend about 48 minutes here chatting through one of the craziest topics around legacy software and kind of what to do about it. And I think the basic of what we're going to focus on is just what to do when you outgrow your accounting software. So before we jump into this topic, I do want to talk a little bit about ERP Advisors Group, which is our firm. So we are one of the nation's top independent ERP advisory firms. We actually do a lot of different kinds of enterprise software. That shadow makes me look like I'm kind of evil with my eyes today. I'm really a nice guy though. But the point is that this is all we do for a living. And we work across a lot of different software like human capital management, advanced planning and scheduling. We even do electronic medical records and patient care reporting. So a lot of enterprise software that our clients need help with. Think about packaged applications, right? We've advised across many, many, many different types. And it's all we do. We're not IT generalists. We don't do cybersecurity. We don't also do accounting. Although I am a CPA and an active CPA, but we are fully accredited for NASBA presentations as this one is today. The best part about, I think, us is we are truly independent objective. There's no bias towards a specific solution, implementation partners, et cetera, except the one that will work for you. And we do bring a Big Four consulting background and methodology based in that, where most of us came from, as well as a focus on mid-size organizations with kind of complex technology issues. So I only say all that because I know what I'm talking about. Usually I don't say that because I think that's pretty clear, but I really wanted to seed that with you all that are listening to this now. Of course, we'll make the recording available. And I think, yep, there we go, Rebecca. Thank you, that we will make the deck available for others as well too. So the key point here is what you're about to hear is very simple. But it truly is based in the 15 years of experience with over 600 clients at ERP Advisors, as well as a regional accounting firm that I worked at for about 8 years with many different clients, as well as Oracle and Accenture and Arthur Andersen. So please take the points that are provided today really to heart if you're looking at enterprise software and if you really do want to know what to do when you outgrow your accounting system. So with that prelude, let's jump into it. Our next slide. I think this is the most important one. I should just talk about this for 45 minutes, but then everybody would definitely pass out, including my team. I'm watching you, Will. But this is really, really important. I mean, after years and years of projects and talking to different people and look, we've had people on projects that end up in the hospital. Now, they may have been pregnant and were, things like that, or other things come up where, all kinds of things have happened during projects. I mean, we really lived through these experiences of ERP migrations with so many different folks around really the world, believe it or not. And ultimately what I've observed is that there's 4 reasons why an organization should even look at changing their accounting software. And there's really just the 4. There's growth, you're on legacy technology, regulatory changes, and new leadership. That's it. If there's some other reason, put it in the chat. We're going to talk about it at the top of or in 44 minutes, because I really would love to get your feedback on that. But in my experience, it's just those 4 reasons. And I'm going to break these down for you so that you can, maybe even come back to this recording later if you think some of these things are applicable to you, so that you can check and make sure that something like this is happening in your organization, your business, your nonprofit, public, private, don't care. Because if it's not, it might not be the right time to change. Here we go. Growth. Growth is the biggest thing for sure, right? That's the biggest driver that we have lots of folks calling us. My partner, Erica, combined, we're called Sherika. We are married. But she runs our sales and marketing and operations. And so she gets a lot of folks that are calling in saying, my business is changing. I'm rapidly growing and I feel like I've outgrown my software, but I'm just not sure. You probably have. And specifically, here's 5 key points that come up around growth that can blow up your legacy software. The first one is you just got more business transactions to track, and maybe you had a system that wasn't built to manage your business at 10x the size that you are now, or maybe you're offering new products, new services. I mean, even all of our partners that are our clients that are marketing and distribution companies, their customers are asking them to do field services. They're asking them to do all kinds of different things that they've never done before. They're distributors and their manufacturers and their services and their support and their software. They've got recurring revenue now. Well, sometimes the older manufacturing apps, like always, don't, believe it or not, have the ability to handle things like the ASC 606 requirements around revenue recognition very well. There you go. Selling to new markets. Maybe you're selling to new customer bases, maybe you're selling to new geographies or something else where your existing systems aren't set up to support that. And then very often we see this too, where especially through some of the private equity investments that a company maybe gets bought. I'll talk about M&A here in a minute, but on the sort of the sell side, an organization sells, has a new leader who comes in, and then they're driving into new business lines. We have a great company that sells building supply materials, and then as they've gotten purchased by private equity, they're starting to offer some new business lines. And then ultimately, as our clients come to us and say, "Look, we're looking at buying some other companies." Merging with some others or acquiring some others. And like I can even think of some data centers recently we worked with, big data centers coming together, through that experience, they realized we kind of need the next generation, the new platform, the new order, whatever you want to call it, kind of system that supports the new M&A side. So growth is usually a great reason. And I'll talk a little bit more specific about how we know if growth makes sense, even from a business case, but that's a great reason to grow. That's the biggest. Now, a couple others here. Regulatory. There are new accounting rules that are coming out. We've seen some of the new lease pronouncements that have come out from the AICPA. That changes things. Maybe your app doesn't handle that. It could be that you're on an application that's just, let's see, Rebecca, is it called sustained support? What's the phrase? Yes. So you'll hear a vendor say something like you're on sustaining maintenance, which kind of means you're getting the minimal amount of support for an app. So if there's regulatory changes, 1099 changes that come out, your app might not support those regulatory requirements. So that's important there. New leadership, I'll come to legacy technology last, but new leadership is important too, because I would say maybe half of our projects are driven from somebody who comes into an organization who's been somewhere else, who has seen maybe best in class software, or maybe it's like the worst software ever, but at least it was better than where we're at now, where we've got more of an older application in that. But the new leadership desires to automate manual processes. And sometimes new leadership says, hey, we only run on Microsoft and we're running on something else. We want to do Microsoft or whatever it is, right? So that's a good reason to change. And then the final one here is around legacy technology. And we're seeing probably 40% of our other folks calling us are here, where they're on applications that are no longer supported. And we're literally in real time, like a few minutes ago, working with one of our vendors we work with a lot, who has a solution in the marketplace. And they've sort of, we have the right data about the sustainable support's going to be in perpetuity, but the kinds of enhancements that are being released are being minimized, right? So you got to be really careful around this no longer supported thing. Rebecca, who was talking at the beginning, who's across the table from me. Rebecca, what's up? Rebecca is our domain expertise. Oh, something about my volume is reduced and hard to hear. There's a note on here. Let's see if we can fix that. How's that, guys? Is that any better? Let me know if that's better. I think somebody just sent that note. I'm going to go with it like this. So with legacy technology no longer being supported, that's really important because if you're perfect, thanks, Gerald. That's really important because if you're on a product that isn't supported, you're not getting regulatory updates, but you're also not getting new enhancements. You might not be getting much for cloud, the opportunities of cloud, multi-tenant, software as a service, and frankly, into the future, right? When you look at things like AI, right, that are real, that's pretty much real, that you might not get those enhancements if you're on a legacy solution. So it's not just about no longer supported, but it's also about future enhancements coming out. Sometimes we have clients that they're on software solutions that were written by people who, maybe would like to retire after 40 years. Or people that have long since left us, bless their souls, and we're still running on the apps that they wrote. That's a little scary, right? And then the final piece here is that it just doesn't do what it should anymore. I can remember a client years ago I worked with for a very specific kind of a retail company, and the app was written exactly for what that business did at that time. And now 25 years later, they do something completely different, but they're still using the same product. So listen, if I didn't say the reason why you're thinking about switching software, if one of these is not the main driver, I would like to know what that is. Sean at ERP Advisors Group put it in the chat. I would put my cell phone out there, but my team tells me not to. But seriously, like if it's not on this list, I really want to challenge you to look at it more deeply to make sure that makes sense. But that's good. I guess I should say the one last thing on this, and then we'll switch the slide is, don't change software unless you absolutely have to. It is very difficult. It's challenging. You're busy. Everybody's busy. There's all kinds of transgressions from the past that come up when you change software, whether you know it or not, especially around data migration that we'll talk about. And so I don't want you to have to go through that unless you have to. But if you have something in these 4 areas, it could be time. It probably is. Great. So we'll see who's with us still. First question here is, what are the most common reasons why companies outgrow their accounting software? So this is just a single choice. So A, growth, B, legacy technology, C, regulatory, D, new leadership, or E, all of the above. And it might not be that all the above happen at once, but take a look at those and see what you think the answer is. I'm trying to think. Even with some of our wonky selections that we've done, I just have to challenge myself a little bit since the time we did the slide to now. Is there any other thing that I have seen? Sometimes you may see a client who, or you might have a circumstance, a business or a nonprofit where they do want more functionality from their software. But again, that usually goes back to one of the 4 points here. So I'd stick with this. All right, let's get the answer. Oh, good. Okay, the answer is, first off, if we do the next slide, and I think it's E, all of the above. And it does sound like we got a question that came through, I think related to this topic. So let me go ahead and handle this point here too. So this is a really good point too, that of something that's very pertinent to this topic, which is, should I change software to save money? That is a great point. And I wouldn't be surprised if Erica didn't get that call this morning. And I will tell you what, in my experience, now there's one area, we'll talk specifics since you guys made it this far into the CPE. The answer is no. Very, very, very rarely are you going to be on an app that you feel like you're paying a lot for, that there's a business case to save money to switch to another app. And I mean rarely. And we've worked with large organizations, especially in my past, but mid-sized businesses, almost one for one. We had a company that was running, and I'll just say it, an old version of PeopleSoft. And the way that the contract worked, this isn't confidential information. It's actually available online. The way that PeopleSoft was doing contracts years ago was based off of revenue. So the company went from about 50 million to about $1 billion, private equity backed as usual, and big assets. They're buying big assets and putting them together, and then they would sell the assets after a very short amount of time. And so we just dug into those contracts. We looked at all kinds of variables. We looked at what a NetSuite implementation would cost, a Microsoft implementation would cost. And see, that's the thing that you've got to remember is, could we have gotten software that was less expensive on an annual basis? Yes, but you have to do the one-time cost of conversion. And if you're a big organization, if you're, say $250 million or more, right, you're going to spend $500,000 to $1 million or more on software. Unequivocally, that's going to happen. So you have that one-time cost that you have to deal with, that you're going to have to look at. And so if the software cost per year, I think Chuck just put a note in here too, if the software cost per year is significantly less with the new one than the old one, well, you got multiple years then that you can recoup your dollars. But a lot of times things are changing, right? And especially in that play, if you will, because it was private equity, I knew that there was going to be a liquidity event in a couple years. So they didn't have time to get the ROI from a changeover. Plus, man, you put your people through a lot of stuff for a migration. So you kind of need to give them some time to get into the software. They need a year or two to really just get comfortable and, really be able to utilize the new software at a new level. So I would really say that very, 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 very rarely are you going to make a change because of cost. If that's your only reason, guys, I say guys, I just told my team, don't use the phrase guys. Folks, that's even worse. People, don't do it. I mean it. I mean, don't. And if you want to challenge me on it, I dare you. That's all I'll say. I don't think that business case is going to make sense. Again, ultimately, this comes down to people, and people do not like to change unless they absolutely really have to. And if it's to save the corporate man a buck, to kind of phrase, Erica knows what movie I'm talking about there. Oh, the things you do to save a buck from Christmas Vacation. People won't support it, and they'll quit. So it's risky. But if they see, oh yeah, we're growing, and we need to get out of this app because of, the person who wrote it, whatever. As long as the team really understands it, again, I'll talk about this more, you're going to have a lot more success. So it's tricky if it's just around expense. Good, great question. Okay, let's keep going. Now, here's some of the steps that, if it's not about cost and it's those other factors that we just said, how do you decide if you need to upgrade? Well, I just know. That doesn't work. You actually have to do some work. You've got to put together a case that you can communicate to others, right? In your organization, in your business, your nonprofit, your public, your private company, all these, quasi-government, government. You've got to have clear understanding across everybody who's impacted by the software. Maybe not all the end users. If you're a field services firm, all the folks in the service in the field don't need to know everything, but their boss's boss sure needs to know, because you're about to change what they're doing. So this is a very simple checklist of things to think about. Starts on the left upper side. We're going to go through these and explain them. You can tell I don't have a lot of slides for today because I'm taking more time with each slide. but it's good from an audio perspective that you hear this too. So the first thing you have to do is you have to understand what's currently going on. We call it the current scene. And like you have to look at that means around the software. How are people using the software? How are they not using the software? How would they use the software if they like the software more? Do people like the software? Do they not like the software? Don't make this more complex. There's all kinds of stuff that, management consultants like me will give you all kinds of frameworks and tools to do that. But we really put this together for you. For kind of the do-it-yourselfers out there that want to do this on your own. Again, I will burn a candle. I'll say a prayer for you. I'll do anything you need to wish you the best of luck with that. But you got to understand what's really going on. Don't fake it. Like what's really going on with your apps. Then you have to identify what's wrong, like what's not working. And usually people can identify this through maybe you talk to some colleagues on how they're using the software. Don't go to your vendor yet. Just don't. But see what's wrong. And people will tell you, users will tell you what's wrong. And you can sort of bifurcate between, well, they're just kind of being kind of picky, or like, oh my gosh, this person has to do 20 hours of manual work each week because the software doesn't do blah. Ooh, okay, that's painful. So then you can determine the ideal scene from there. And you can really look at this and say, okay, ideally the software from order to cash, procure to pay, record to report, design to build, hire to fire, terminate, I guess it is, or there's a better way to say that. The employee lifecycle, I should say. E-commerce, how planning and scheduling should work, how MES should work, right? You can look at what's really ideal and how it would work. Then you can start to see what'll trickle out of that are benefits. Those are things that are for real, no kidding. The benefits that the organization, the people will receive from changing the software. Like if you got somebody who's doing a bunch of manual stuff for 20 hours and there happens to be 300 of them doing it. We had a client like that, a global claims adjuster, frankly, that had tons of manual stuff that was going on, right? So what could those people do with their time if that was all eliminated, right? And yeah, is there an AI agent that's going to come in and replace all the people? Is that really a benefit? I don't know. Maybe your organization's like that, but the vast majority of companies and people that we work with, it's more about getting their people aligned to do more value-added work. Then you can estimate the total cost of ownership. But Sean, I don't know how much Microsoft Dynamics 365 finance and operations is to implement and then to license or subscribe to. Yeah, I understand, but you kind of know some things, right? And I'll get into sort of some tiers of software and give you some rough estimates for that one-time implementation cost. But, $250,000 to implement a basic solution, $1 million to implement a little bit bigger tier one solution. And then if you're looking at SAP, some of the Oracle Cloud stuff, or maybe some bigger projects, maybe some of the bigger products, they're going to spend multiple millions on that. If you're going to spend that much, you just should call me. Don't go through this on your own. You don't want to get fired for getting the wrong costs in. But those are just some rough thumbnail estimates there. And you've got to look at your benefits versus your costs. Because if you don't, somebody else will. So at least you got to spend a minute to figure that out. Most people that are going to be on the CPE today are of a finance background. I mean, look, we had to learn this stuff in college, right? Some of the managerial accounting courses, some of the other stuff. You got some other people on your team. You can come up with just some thumbnail sketch numbers. For you, that might be enough. For sometimes our PE-backed portfolio companies, they have to build out a 10-year return on investment model based on net present values with all kinds of discount rates. Hey, that's fine. You can figure that out. Just ask AI. Another key piece though is this third to the last bullet is it's not just about benefits and costs. It really is assessing change management risks and then identifying mitigations. You don't want to just say, oh my gosh, all 1,000 of our field services people are going to have a new way of tracking their time. By the way, in field services, very rarely are all of the end users really impacted. There's usually a crew manager or there's an admin person or whatever. Those are the people whose lives are really impacted. So you want to sort of identify who the user groups are that are impacted and what the risks are with them, and then just come up with some simple mitigations. And once you sort of have that, we would consider the whole business case, not just the financial side, but the change management stuff. Go to the key stakeholders and say, hey, I really think this is the right thing to do for the organization. Here's why. Do you agree? And most executive teams, mid-level folks and above, if there's a real case for it, they're going to agree with you. And they're probably going to say, oh, I'm so glad you brought it up and not me. So, when you bring these things up, you might be stuck with the project, but that's okay, right? I mean, yeah, it kind of looks good on a resume, but it's more about implementing change in an organization where what enterprise software can do because the ideal scene, and maybe the rest of the folks don't, right? This is why a lot of new management, new leadership is the reason why we change. Finally, now you can start the selection. And a huge tip, we used to have my face over like a Superman guy with a cape. But I mean, that's how valuable these tips are. Don't contact software vendors until you know what to do. And look, if you have, fine, they're great. There's great vendors out there. We could probably do a CP on how to handle software vendors. Hopefully there's some listening. But the point is that you really got to figure out what you need, and that you have at least enough like agreement across the executives, right? Maybe you don't have like, okay, we're going to go forward, but they agree to look, they agree to go to a selection process before you fill out something on, one of the websites. Oh, I'm interested in getting some information about accounting software or whatever. Whoosh, you're going to get 10 calls that day because that's how they make money. I make money by giving you guys advice, talking about all this stuff, and then helping you through your process. But I'll tell you, we have so much stuff going on that I want you to just do it right too. So maybe it's because we're doing good, we're busy, could always be busier, of course, always looking for great people to hire, hint, hint. But I do this because I really want you to do it right, right? My wife makes me do CPE, and that's why I have to put these on also. Just kidding. Actually, that's not true. It is true that's why she told me to do this years ago. So I'm doing it. Anyway, that's it for the decide if you need to upgrade. Good. So next question. So true or false, a growing company should always upgrade from their accounting software. True or false? And I'll tell you, a couple of weeks ago, we talked to a great business, fast growing, consumer goods, I would say, with some software, of course, right? You got this manufacturing, distribution, recurring revenue services kind of model, which a lot of businesses have. And they were about 120 million, and they were running QuickBooks. And we told them, let's see what the answer is here. All right, we'll give you another few seconds to put in your answers. Good. All right, let's see. The answer is false. So we actually said to these guys, maybe you don't have to change. But given the fact that you're running your inventory in Google Sheets, which, is good. At least it's backed up, right? We used to say that about Excel, like, oh, who backs that up? Oh, it's backed up on the tapes that happen every night. You mean the tapes that never leave the office? But it's in Azure. Okay, that's better, right? But Excel can blow up, and Google Sheets can too. So we said to them, like, if you're fine on the accounting side, but take a look at this inventory here. There's actually some inventory systems that link in with QuickBooks. But then, if you're like going to grow anymore, maybe it's time to invest in your software because you've kind of gotten away without doing it. So, but it really is true. You do not have to necessarily upgrade. Great. Let's move on. So we've gone through that process of getting buy-in from all of our major stakeholders. We know what the ideal scene is. We've got some costs and benefits, blah, blah, blah. Now let's go to market. And this is our total certainty selection process here on the right-hand side. This exactly, we have a great guy who's just joined our team recently, Matt. He's going through all the training on this stuff. Almost, he's not quite there in his training, but he will go through and understand each step that goes in here. So we're really sharing this with you guys because this is what works. This is what we do on every single one of our selection processes. It's pretty detailed, but some of the key points here that I'm going to cover over the next few minutes, I think will help you to know from a selection what you should do. So there's a couple things here. The first one is you've got to send some kind of a document to the vendors. We call it an RFI, request for information. You could call it an RFP, and some of our government clients have to send an RFP. That's totally fine. You're going to put more detail than an RFP. But even if it's just a spreadsheet that says, here's the high level needs, here's some of our key use cases that we're looking to meet in the software, and then send that to everybody, all of the vendors that you identify. And how you identify those vendors, you can do the research online. You can always call us, like you'll figure it out. You will, because there's not really that many vendors, frankly, for any micro vertical that you're in. There's like a handful, there's like 5. So once you identify those, then send them the same document and ask for some estimated pricing for implementation and for the ongoing software. But if you send the same document, then you're going to get at least a normalized response back versus just calling in, talking to each one. And one of them happens to say something like, oh, do you need to automate your shop floor? And you say, yes. Well, the other one doesn't ask it. The other vendor doesn't. The one that did ask it puts in manufacturing execution system, MES, into your quote. The other one doesn't, right? Well, the other one looks better because it's cheaper. No, it doesn't have key components in it. So at least send the same thing out to everybody to get that feedback back. And we also suggest that you create a demonstration script even with that document that you send to the vendors, to be totally honest with you. I'm aware you guys have day jobs, so I don't know how much of this is real for you, but you should at least have something written once you get the response back from the vendors and you take a look at the side by side, we call it the apples to apples comparison, and decide which vendors look good then to go into a demonstration process. You want a demonstration script that you give to each of them again, so that you have something to hold them accountable to, and that they're going to show you, the vendors will show you about the same thing. We do 2 rounds of demos. We do a mini demo where it's literally like an hour or 2 to just see the product. And that is enough most times to eliminate some of the vendors. Sometimes the products are like, whoa, what is that? It's too modern, right? If we're coming off an old AS400 custom system, that's fine. Or you look at a product like, oh, this looks like what we have, right? Okay, fine. So that mini demo will eliminate some of the vendors, but then finally, for the final demo, you want to only invite a couple vendors to that, really 2 preferably. 3 is still confusing, but this demo, you want to give them plenty of time. You want to give your teams plenty of time to review the software. Give accounting a couple hours, give inventory, warehouse management a couple hours, manufacturing, give the services and the projects people a couple hours, or whatever it is. Give each of your functional areas some time with the vendor. And again, it's better to have a script for each of the functional areas. I hate to give you all this work, but it'll pay off in the end for sure. Then when you get through that, know that you're not done. You still have to do functionality deep dives, technology deep dives, implementation deep dives. You got to understand what you're about to buy here, and you want to interview the implementation resources that are going to be on your project. Oh, but the vendors will say, but Sean, we don't know who's going to be on your project. It's like, okay, good. Let's just assume that we get this done in a month, right? Hint, hint. Who would be the lead person? Oh, it would be this person or that person. Great. Let's interview both of them. Another really key thing here too to think about that's pretty interesting that we continue to find across the board is referrers. So references, I should say. How important is it to get references about the vendor that you're working with? It's important, but not for the reason that you may think. Sometimes the references do say things where you're like, oh my gosh, what you just said, we dodged a bullet. It would have been terrible working for this company. But come on, the software vendors know what they're doing. They're not going to give you bad references. But what they are going to do is they're going to give you references from people who've been through it before. So there will be a time, just as an example here, if my wife will let me, where I will do and become a pilot. Now, I'm going to talk to my friend Will, who is a pilot. He's going to give me lessons learned, right? But he's going to tell me things. He's going to be like, oh, you got to do it. It's great. Da, 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 da. That's kind of what good people do, right? He's not going to say, you're going to die. I hope not, right? Well, we're not going to die now. Erica will. She'll tell me that, but that's okay. We'll work on it. That's later in life, by the way. But the point of what I'm trying to say is the references always give you such great information of things that you didn't know because you haven't been through it and they have. So that's why you see it's teeny tiny there, but 5.3 is check vendor references almost near the end, right? And then of course you have to negotiate the final contracts. If you're going to negotiate a software contract on your own, I wish you luck with that. Please download our document, our white paper on our website about things to consider when negotiating software contracts. Like We list all the levers that can be pulled there. There's lots of different things you can do. For instance, when a vendor says they want 50% upfront of the implementation services, don't do that. Just don't. You might not have even known that you could ask for something different, or you might have just signed the contract and didn't read it. But now you've heard that from me. Don't do it, because you basically have no leverage over the vendor. And it's not like you want to hold payment from them, but vendors are very, very busy these days. So you can do a little bit of a deposit. You should, to get on their schedule. But that's just one of many things that we talk about in that document. So then you get to a point where you're ready to select the final vendor after you've done the contract negotiations. So that's a great selection process. But when we talk about selection, what we have found, and we'll go to this next slide here too, is what are we selecting? And we kind of look at ERP really from this view of accounting applications up, like basic accounting application packages, right? And we're really talking about like a QuickBooks, MyOb, Sage 50 Cloud. You can see there in the bottom right. Those are like the basic accounting applications, and they do a little bit of other stuff, right? We use QuickBooks Online, and it's perfect for our business, but we have a very incredible professional service automation solution that manages all of our time and our projects and all that other stuff. And then we integrate in with QuickBooks. But those tier 4 accounting packages, they tend to do just a little bit. Then we go to a tier 3 ERP. This is kind of based on my own definitions, frankly, and Gartner's, that ERP adds a rich GL with other department functionality. So we may get some inventory management. We may get some basic manufacturing. We may get some kind of next tier projects kind of capability. So when you're doing your selection from that last slide to this slide, I want you to understand, you got to know what you're selecting. That's why we're going through this, by the way. So now in a tier 2 ERP, that's where we get to where a lot of the organizations that hire us are in, and they might be 10 million in revenue, but definitely upwards of 500 million in this tier 2. It says 50 to 500, but those lines kind of blur. But this is where a customer requires deeper functionality than just rich GL capability and some other departmental function. They want to go deeper, and they might want to do a little bit of customization, hopefully, to their specific processes, right? And there's a good list of vendors on the right-hand side. There's many, many, many others that fit in there, but that gives you some ideas of some of these solutions. And we tend to focus on a lot of those vendors, but I will tell you, in every single micro vertical, so architecture, engineering, civil engineers, or if we go to manufacturers, ETO, job shops, right? There's all these different areas of businesses and nonprofits that you guys are from, and government agencies. And in each one of your areas, say nonprofit for health and human services, Blackbaud is there. So there are these apps that you'll hear about at conferences, or maybe some of your colleagues are there that aren't listed on here. These are more general. But those are kind of what we consider tier 2. So it's kind of the tier 2, generally when used box plus the 2 below. Then we go to the tier 1s, very complex operations, very high transaction processing. There's some of those solutions listed there. And some of those, like Microsoft Dynamics 365 Finance and Operations and the Infor, IFS, they can go into that tier 2 area also. We could debate which should be where. I'm not going to waste my time with you on that. I would instead say, no, wait a minute, what matters more to you? That's what I want you to focus on. But I do want you to see that there are multiple tiers of software, so that when you're doing a selection process, you kind of know, like, based on your revenue size, or it could be your budget for a nonprofit, or even for some government agencies, you kind of know which range you're in, and that eliminates a lot of the other apps that you don't have to look at. So that's actually a really big question that we often get, which is, what are the tiers of software? So good. That's it for the tiers of software. Another question here. So which of the 4 tiers of accounting applications is QuickBooks in? So tier 1, 2, 3, 4. Unfortunately, QuickBooks sometimes scales to the tier 1 companies. No, that's okay. That just means there's a lot of spreadsheets. Excel is America's #1 accounting system. I'll give you a few more seconds on that. I had a vendor call us the other day, and I thought they had a reference or referral for us. And and I thought they had a prospect for us, so that's why I was talking to them. And then he says, so what would it take for you to get off your current systems? And I literally, I'm kind of embarrassed. I shouldn't probably say this, but I dropped an F-bomb and I was like, no, that ain't happening. There's no way you could make me change. There's no way I'd put my organization through that on where we're at right now. But that's also because 5 years ago, we did do a change, expecting a lot of growth, which we've had. And man, that was the right time to change because we weren't in the middle of all the growth. You know, we had the software that could just scale with us. All right. The answer on this one is tier 4. That's the right place to put QuickBooks. Ooh, good. Good. I hope this is helpful to everybody. We're going to switch over here on the next slide with Robert and Samuel. Looks like such a clip art picture, but well, actually, I think it's from exactly where I'm sitting. So you could tell that's the real deal. That's hilarious. But this is important that along the way, when we talk about, you know, what to do when you outgrow your accounting systems, one of the other reasons in terms of functionality needs that people have are reporting. So this is helpful. This next slide here, I'll spend a few minutes into this. I want you guys to understand that, I want you all to understand there are different types of financial reporting tools in the market. So if you're looking for these types of functions, just know they might not be in the ERP, right? They may be in the ERP too. So again, this presentation is based off of a lot of discussions with people. And so we've had people come to us and say, hey, I want, you know, BI and analytics, therefore I want to change my ERP. And we're like, no, not necessarily, right? We're just listening to a presentation from the CEO of Acumatica yesterday, and he was saying, you know, the vision of the future with AI is it's very data driven. You have to have data. Well, the data is in the ERP. So that's the first part of it. But if all you really need is BI and data visualization, I was talking with another gentleman just yesterday who went into a company and put in Power BI. And that was perfect for what they had because their data was available. So let me break each of these down with that example, that if you have one of these problems, 1, 2, 3, or 4, you know you're probably going to have to go to market for something other than an ERP. I think that's obvious, but it's not. That's why it's in here. That's why we're having this discussion. So number one, like I just said there, BI data visualization, by far Microsoft's tool set, the Power Automate, Power BI is the leader, but you sure hear a lot about Tableau. Yeah, since Salesforce bought it, it's changed. Pricing's gone high, right? But you also hear about Snowflake. There's many other data warehouse kinds of solutions with data visualization and mapping, Click, many other solutions out there that fit in that space. And how you choose the right one, go back to our process earlier, figure out what are the key things you need, talk to, you know, identify the vendors, get some cost and benefits, blah, 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 all that stuff. That's what I basically said earlier, blah, blah, blah. But kind of take a look at that. You'll see that there's really a handful of solutions that fit into just that pure category. But that problem that you solve there is really just around, I want information about the data I have. I want intelligence and I want to visualize it. That means you have the data already there, right? Now, sometimes that problem bleeds into, I want information available for financial scenario planning into the future. And that's what financial planning and analysis tools provider, FP&A, right? We hear about FP&A groups in some bigger companies, but FP&A tools focus on that financial planning and analysis, which really kind of stems down to, again, future scenario planning. We saw a ton of that in COVID. We had some clients that were doing like 8 or 9 scenarios over 3 or 4 months. What happens if all of our customers go away? What happens if our employees quit? What happens if the market blows up and we 10x our revenue, right? I mean, there was all kinds of crazy stuff. FP&A from a financial reporting tool is best for those kinds of scenario planning at a higher level, taking an income statement and applying different assumptions to the different areas of it, as well as driving into employee-based assumptions or revenue assumptions, that kind of thing. That's FP&A tools solve that problem. Then you can have a multi-company consolidation situation where maybe you've acquired more companies, or just over the years, you've been doing consolidation through a lot of spreadsheets. We see that. Or maybe the consolidation in the past was a little more informal. Now we've gotten bigger. Now we're owned by private equity. We're going to go public, whatever it is. And we need consolidation tools. So there's tools in the market that handle just the consolidation, for sure. By the way, I should have said for FP&A, you hear tools like Adaptive Insights. Vena is one that we often hear. Many others. Planful's another, et cetera, that kind of do that. Oracle has their big enterprise performance management tools, actually, that does all of this in one. SAP has BPC. There's all kinds of different things that are out there around the FP&A, but then the multi-company consolidation really handles kind of that, bringing together multiple entities, the intercompany transactions and eliminations, and maybe even some foreign currency translation all in one. You know, we've used Workday for that, for a large life sciences company. Then you have financial close solutions that help you automate journal entry approval, the reconciliations, approvals, et cetera, Workiva, Blackline, those kinds of solutions. Oh, those are really expensive. I would never buy that. Yeah, guys, but you know, when you have a material weakness because you don't have good documentation on your journal entry approvals, that's really expensive. So yeah, those tools, they do cost a little bit, but when you have those problems, again, it goes back to what I said earlier. If you have the problem there, then these tools solve that. Finally, yes, the ERP itself does solve some of these problems within itself, and oftentimes what we see are the tier 2 vendors. They will offer maybe a tool that they've written that might be outside the solution, or they have a trusted partner that they're selling some of these tools that do that, and then they're able to resell them within the platform. So it's all kind of put together, which is good. So the ERP itself can do those kinds of things too. But remember, ERP is really just around transaction processing. So we wanted to bring this up because one, I love seeing pictures of myself where I don't have as many gray hairs. And even though Quentin's a little bit younger than me, it makes me look younger. But two, because when you are doing the selection for an accounting system, you better know what you're selecting. So again, we went through all the tiers, we went through some of the financial reporting tools. So that gives you a good feel for what's out there. Let's do another question here. And then I think we're going to wrap it up with a summary. Okay, so what do you feel is the most important step to consider for a company that has outgrown its accounting software? Don't change software unless you have to. Make sure you really understand what you need. Drive the selection process by telling the vendor what you want, and then get the implementation done as fast as possible. I can tell you that B, C, and D are things that we absolutely make sure are in place for every single one of our selection processes. And we're in about 20, 25 of them right now across our bigger team. Last time we did this, I think we were, I don't remember our size, but now we're about 40 people. So we've got a lot of different projects going on. But what's the most important thing here? What's the most important thing that if you only remember one thing that Sean said, what's that one thing? Give you another couple seconds here. Perfect. It's kind of funny because we will have people. We just had this. Somebody called us last week. A really bright owner was talking about, my business is just not that complex. As soon as somebody says that to me, I'm like, oh my gosh, I bet they have the most complex business ever. Seriously, it's funny. It's kind of true. My business isn't that complex, and I've automated this, this, and this, and this, and it seems like I should buy a software solution. There should be a software solution that does it all. And I'm like, you're right. There should be. You are probably thinking about writing it. You probably will think that after I tell you what I said, but remember, that's not your core business. You're not a software developer. But guess what? It doesn't exist. And if it actually, the software solution that you are looking for is like $250,000, so let's see what our answer is. The answer is A. Don't change software unless you have to. Whatever management consultant ever said that? Come on. So it's true. Don't do it unless you have to. It's a lot of work, but it's definitely worth it in the end if the benefits are there. All right. So I'll wrap up here. If you guys have any more questions, I know I saw a couple things pop in. I don't know if I answered them all as we went. So team, let me know if there's something specific. But I do want to summarize this because these are the real key points if you're looking at what to do when you have legacy software. Is it time to change, right? And the first thing, like we just said, I don't think we can say it enough, don't change it unless you really have to. And if you really do have to, then do it right, right? Make sure you really understand what you need before you make a single call to a software vendor. You can always call Erica. She can always kind of guide you for things for sure. But don't get yourself in a position where you have to manage all this communication with all these vendors because you're a really nice person. Well, Sean, I can tell them not to call me. I understand, but these people get paid to call you all the time. And they're, sitting in desks with their headsets on, and their job is to call you. And so they're going to call you. And then you can tell them, don't call me. And then they'll have somebody else call you. So just really understand what you need first and then make the call so that you can drive the conversation and not be driven by the other side of it. To this point, and when we talk about driving the selection process, you got to tell the vendor not just what you want, but you should also tell them a little bit about what you want for the software and to meet your business processes, but also what you want for your selection process. So you can tell them, I'm going to send you a document that gives you a good feel for what we need. I want you to send me back some just estimated high level pricing, just so I know if I should be talking to you. Then I would love for you to do just a mini demo, just so I can show a few people your software. Then we're going to want to dive in deep if you make it to that point, and then we'll do all this other diligence later. That's great. The funny thing is the great software vendors will love you for it because they do demo after demo after demo after demo, and that's a waste of time for them. Couple last things here. So get the implementation done as fast as possible. Of course, test it. Don't just slam it in. But this is really, really important, that this is like open heart surgery. And we have 3 clients like this right now. For various reasons, the timeline has increased. All very, very good reasons. Listen, a successful ERP implementation is not gauged. I'm sorry, but I would challenge this from anybody, Chuck, as I know you're in the business. I love it. But it's not on time, on budget. That's not it. It's a software delivered that people are happy with. And we don't even know sometimes when we get into an implementation what it's really, 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 really going to take to do that. We know, of course, within a couple months and 25% budget, maybe you sandbag a little bit more just in case. But once your users are really testing the app, even though they told us what they wanted, once they're in the app and they start using it, I can't believe how many times somebody says, well, that's not what I want. I want this. And we're like, okay, on page 22 of the business design requirements document, you said you wanted it like that. Now you're saying you want it like this? Well, of course I do. Oh, okay. Well, too bad. You get it like that, right? And that's not going to work, right? Especially if it's wrong. So the longer the implementation goes, the more stuff comes up, the more people get sick, the more people quit, the more the software vendor sells more projects, the more the requirements change. So you kind of got to like get in there, do it, and get into the software and then grow with it over time. You can always add more to it, right? If you have to take it away, that would be silly. So it's better to go with a minimum viable product kind of concept of like get in there, get people into it, and then you can increase as you go. And please call us for anything. We're out there. You can hit us on LinkedIn. You've got Elizabeth's email, Erica at ERP Advisors Group. She does a ton of Ask Erica calls. She's like Lucy with peanuts with the sign that says, I think don't we have an emoji, or we've got a meme on that. We'll send it to you after the call. Just kidding. But do let us know if you have any problems or anything that we can help you out with. All right. I think we're at our time, and we got a couple questions. Great.
You'll have to. Do you recommend performing a detailed current state / future state analysis to start the selection process?
So the question is, do I recommend performing a detailed current state and future state analysis before starting the selection? Is that what it was? Yep.
Yes.
Yep. No, actually I don't. I do suggest that you do a medium level. Maybe I'm being a little semantic here, but I don't want you to get stuck in analysis paralysis. And we do see that sometimes where organizations are out there. We got to define all of our business processes, our current processes before we start this. That's not wrong, right? But as a guy who made his living building out as is business process models, I often saw that they were worthless, because it would communicate to a certain level, right? And that's why I say do some, like we do like high level procure to pay, order to cash. We call them level 1 diagrams, where we do kind of end-to-end processes so people can see that. We can put some pain points on there. But for you to define exactly your receiving process for raw material versus other goods. Sometimes you have to do it if your problems are around warehouse management for sure. But if we can just say something as simple as, we receive notification that we're going to get it. It shows up at the dock. We inspect it. We put it over in this, or we put it in this section. Then we inspect it, quarantine or whatever. Then we inspect it. Then we put it on the shelf. Great. That's it. Don't go any deeper than that. That took 30 seconds. So I just don't want you to get too deep on the current for sure. And so now that also goes to the ideal, right? That the ideal is really probably going to be driven more from the specific software solution. So in that process that I just talked about, you really don't, what's your ideal for receiving? Well, maybe you have, we've had some clients that have different landed costs because they order products from overseas. Good luck with that right now. Ooh. That's a whole nother topic for another time, right? Versus domestic. And maybe there's different processes to capture costs and stuff that they have to do. That's perfect. A system should be able to support that. Focus on those unique business requirements in your ideal scene. That's what I would say. So don't go too far in the analysis, because guess what the implementation partner is going to do when they get there? They're probably going to do some process modeling and documentation as well. So, did we just waste the money and the time by doing it up front? No, not if you did it down to the basic level, the medium level. But if you're doing detailed, guys, I would just say be careful with that, because it might be a waste. Good. So the question is, what about mapping custom processes? Would I say the same thing? No, I wouldn't. I think, and again, it depends on your custom process, right? If it's how we do custom manufacturing or how we manufacture custom products, well, it's really kind of ETO in general. So that's like a general engineer to order, design to order kind of a process. But if you do something like some marketing processes, or you do something really wonky that's really, really unique, I might even offer to you that might not be what we would put into the ERP in phase one anyway. Now, should tell the vendors about it? Unequivocally. Let's say you have a very custom process for how you do credit checks and assign credit worthiness to your customers. If there's tools and things where you check a DMB, their DMB credit score, you check the purchases that they've done in the past, you do and all this stuff, and you want to automate it. It might be too complex to even put in the software solution. Should you tell the vendor that, yes, this is what we're doing? Unequivocally, you should absolutely tell them that. But I would tell you that putting custom processes in phase one is extremely risky. But Sean, the whole solution is based around this. Shelby on my team, I'm talking to you, Shelby, right now. How hard is that, Shelby, for our clients to do? I don't think they're on this call. They insisted on doing some custom processes, and we challenged the heck out of it. And that's the reason why the project's getting pushed, is because those custom processes have turned out a lot harder than anybody thought, because this is important. If you've actually made it this far in the conversation, you deserve to hear this. These custom processes are going to be complex. Now, you try to understand it for yourself on what it really does. Do you really know what the custom process does today? Like, do you really know it? You should really know it, because you're about to tell somebody what it is today. That person has to understand what you just said. And sometimes the implementation people don't, and they might say, yeah, I got it. They don't know what you're talking about. Then they have to go back and tell a developer. Then they have to take what you said and figure out in their minds, well, how do I build this into my app? Well, I have to do this, and this. That's the second risk. The third risk is then they tell a developer what the developer has to do, and then the developer has to understand it. Then the developer has to build it, because guess what? They're busy. Then the developer has to deliver it, and then the person at the vendor side has to review it and make sure it makes sense. And then that vendor has to find time to sit down with you and review it, and then you have to know what you're talking about and what you're looking at in this brand new app to tell them, yes, this works. 10 challenging points. And I would say, in my experience, at least half of those fail. There's some problem across one of those 10 points. And so you're crazy to do a bunch of custom stuff in the system. And, but what about upgrades? I don't even care about it. We don't even talk about upgrades, because sometimes when you customize too much, you can't upgrade the app, that whole thing. But the bottom line is, I really challenge you to not do custom stuff in phase one. Now, if it's so huge in the future, we got to do it. well, what do we need to build into the app and the implementation to make sure that we can do that in the future? If that makes sense. So I'm trying to be a little, pushy about that one because I have like marks on my back from being whipped by my clients, not literally, but close, for two things. Data migration, their data is a nightmare and they blame me for it, but that's okay because we fix it. We're that kind of company. And the second thing is customization is taking longer than anybody expected. And you got to remember, nobody has ever built an app or written an app for your particular company. So you really need to be careful with that. I think we've written tons and tons of stuff on this. You should look at the website for some more details, but I think that's all we got. Oh, please. Yeah.
Yes.
One more question. Yeah, I appreciate it.
Software, or do they tend to use Excel or simply rely on their CPA to run the year-end reports?
Very few of our clients don't use a fixed asset system. Some of our smaller clients will use their CPA, but most of them have fixed asset modules within their ERP, or they use something like Sage fixed asset system, fast, been around forever. And then they get the journal entries and move them over to their accounting system. So I would say there's some great tools out there in the NetSuite space. NetGain has a great Net Ledger, I think they call it. No, Net Assets. And other tools too that are out there that are really good. Try to find a fixed asset systems because your people doing depreciation, amortization calculations, and journal entry creation in Excel. Like, come on, they got to have something better to do than that. That's my honest opinion. Great. Rebecca, back over to you. Thanks, everybody. Appreciate your time.
Wonderful. Thank you, Sean. As always, you've shared a lot of great information, and I hope everyone got what they needed out of this presentation. And thank you, everyone, again for joining us for our webinar. If you have any questions about today's presentation, please let us know. Call or email us. We are happy to help in any way. Also, if you would like a copy of the deck from today's presentation, which I know a lot of you are asking, please let us know. You can email Elizabeth as well for that, and we are more than happy to share that. And again, if you need CPE credit for today's presentation and you answered each of the polling questions, please send an email to Elizabeth at elizabeth.jones@erpadvisorsgroup.com. That email is in the chat. As well as I did send Erica's email if any of you are currently undergoing a project or contemplating your need for a new ERP or just have questions. She is a great resource, and as well as erpadvisorsgroup.com for more resources that Sean was talking about. Download your own checklists. Be sure to join us for our next webinar, which is scheduled for Thursday, April 24th. What to do when your software reaches end of life, where we will discuss what businesses need to consider when your ERP vendor announces their software is coming to its end of life, which means it won't receive any support, as Sean talked about earlier. Please go to our website, erpadvisorsgroup.com, for more details and to register. ERP Advisors Group is one of the country's top independent enterprise software advisory firms. ERP Advisors Group advises mid to large-sized businesses on selecting and implementing business applications, from enterprise resource planning, customer relationship management, human capital management, business intelligence, and other enterprise applications, which equate to millions of dollars in software deals each year across many industries. Thank you again for joining us.